Hello, friends. Something shifted inside the Social Security Administration this week. Not a minor administrative footnote, not a seasonal adjustment that irons itself out by next quarter. Something that fundamentally changes the way SSA is processing, calculating, and in some cases, communicating benefit information to retirees. And the people most affected by it are the ones sitting at home right now with no idea that the rules they built their retirement around just got rewritten underneath them. I want to be precise about what I mean when I say SSA flipped the script, because that phrase could mean a lot of things, and I am not here to alarm you without substance behind it. What I mean specifically is this: the assumptions that most retirees have been operating on about when their benefit adjusts, about what triggers a recalculation, about how Medicare deductions interact with their net deposit, about what their options are when something in their account changes without explanation, those assumptions are no longer fully accurate. SSA changed the underlying mechanics, and the gap between what retirees expect and what is actually happening inside the system right now is where real money is being lost. Today, I am going to close that gap. I am going to tell you exactly what SSA changed, why it matters in real dollar terms, and what the window looks like for responding to it before the change finishes compounding in a direction that costs you money you cannot recover later. Stay until the very end. The last thing I cover today is the change that retirees are least prepared for, and for the group it applies to most directly, it represents the single largest dollar impact of everything SSA shifted this week. And if SSA Now is the channel that keeps you ahead of what SSA is doing before it shows up as a surprise in your deposit, subscribe right now and turn on the bell. What changed this week has deadlines attached to it. The people who find out now can still act on it. The people who find out later cannot undo what already processed. Let me start with the foundation of what changed and why SSA made this move now. The Social Security Administration has been under sustained pressure from multiple directions simultaneously. Congressional oversight around overpayment recovery practices, ongoing concerns about processing accuracy for certain benefit categories, and a broader administrative push to modernize how SSA handles mid-cycle benefit adjustments for the current retiree population. The changes that came out of that pressure are not cosmetic. They touch the mechanics of how benefits are calculated, adjusted, and communicated, and they are in effect right now. 4 specific things changed. Let us go through each one in the order of how directly they affect what lands in your account. The first thing SSA flipped: how mid-cycle benefit recalculations are triggered and communicated. Previously, SSA's automatic recalculation process for post-claim earnings ran on a predictable annual schedule. You worked, the earnings posted. The review happened at a set point in the year. The adjustment, if any, showed up in a predictable window. Retirees who understood this schedule could anticipate roughly when an increase from continued working would reflect in their deposit. That schedule has been restructured. SSA has moved to a more dynamic recalculation trigger system, meaning reviews are no longer happening on a single annual sweep, but are being initiated based on when earnings data finalizes in the system. For some retirees, this means a benefit adjustment arrives earlier than they expected. For others, it means the adjustment is landing in a different month than they planned around. And for a third group, the most important one, it means a recalculation that should have happened has not happened yet because their earnings data triggered a manual review flag rather than an automatic adjustment. If your benefit has not changed in the last several months and you worked in 2024 or 2025, your account may be sitting in a manual review queue right now without any notification reaching you. Log into ssa.gov today, open your earnings record, verify that your most recent working years are posted correctly. If you see a discrepancy or a missing year, call SSA at 1-800-772-1213 and ask specifically whether your account has been flagged for manual earnings review. Asking the question directly is the only way to surface an answer that the system will not volunteer on its own. Second thing SSA flipped: the way IRMA surcharge appeals are being processed. This change is moving faster than most retirees realize, and the window attached to it is shorter than it should be given how little SSA has communicated about it. IRMA, the income-related monthly adjustment amount, is the surcharge Medicare applies to your Part B and Part D premiums if your income 2 years ago exceeded certain levels. It comes directly out of your Social Security deposit before the money reaches your account. For 2026, SSA is referencing your 2024 tax return. If that return showed elevated income due to a one-time event that no longer reflects your current financial reality, you are paying a surcharge based on money you no longer earn.
What SSA flipped is the processing timeline and prioritization for SSA 44 appeals, the form that allows retirees who experienced a qualifying life-changing event to request a surcharge recalculation based on current income rather than a 2-year-old return. Under the previous system, SSA 44 appeals entered a general processing queue, with timelines that could stretch several months. Under the updated system, appeals supported by clear documentation of a qualifying event are being prioritized for faster review, meaning people who file now with complete supporting documentation are seeing decisions and deposit corrections arrive more quickly than they would have under the old
timeline. What this means practically is that if you have been sitting on an SSA 44 filing because you assumed it would take months to matter, the calculation has changed. A well-documented SSA 44 filed today moves through the updated process faster than it would have 6 months ago. And every month you delay is a month the surcharge continues pulling from your deposit, with no retroactive refund for the months that already passed. If your Part B deduction exceeds $185 per month, and your 2024 income was elevated because of retirement, a property sale, a Roth IRA conversion, or any other one-time event, download SSA 44 at ssa.gov and file it now. The updated processing timeline makes sooner meaningfully better than later. Drop a comment right now and tell me this. If you are currently paying an IRMA surcharge, did SSA ever explain to you that it could be appealed? Because what I consistently hear from people in this community is that they found out about SSA 44 from a video like this one, not from SSA itself. And I want to know how many people that describes right now. Third thing SSA flipped: overpayment recovery rules and what retirees can actually do about them. This is the change that has generated the most confusion and the most distress among retirees in recent months, and SSA communication around it has been poor enough that a significant number of people are either accepting repayment terms they do not have to accept or missing response windows they did not know existed. Here is what changed. SSA has updated its overpayment recovery framework, specifically around the default recovery rate applied when benefits are being withheld to repay a claimed overpayment balance. After significant public and congressional pressure following a period when SSA was recovering at 100% of monthly benefits, meaning some people received $0 while their full payment went toward repayment, the agency adjusted its default recovery rate downward.
But the revised rate is still not uniformly communicated, and the options available to retirees around modifying that rate are still not appearing clearly in the notices people receive. Here is what you need to know if an overpayment notice has arrived or if your deposit dropped unexpectedly. You have 60 days from the date on the notice to file a formal appeal if you believe the amount is wrong. You can file SSA 632 to request a full waiver if the overpayment was not your fault or if repayment would create genuine financial hardship. And you can request a reduced repayment rate, one that fits your actual monthly budget, by contacting SSA directly at 1-800-772-1213 and asking to negotiate a modified arrangement. What SSA flipped in this area is the internal guidance around how recovery rates are set at the individual level. The updated framework gives SSA field offices more flexibility to approve reduced rates without escalating to a supervisor, meaning a request for a lower rate is more likely to be accommodated now than it was under the previous framework. But that accommodation still requires you to ask. It does not arrive automatically. The default rate processes until you contact SSA and request something different. If your deposit dropped and you received a notice, do not absorb the default rate in silence. Call SSA today and ask what options are available to you under the updated framework. Fourth thing SSA flipped, and this is the one I told you to stay for: how survivor benefit elections are being handled at the point of initial claim. This change affects a specific group of retirees, but it affects them in a way that is financially significant enough that I want to make sure everyone watching understands exactly what it means. SSA has updated its internal guidance for benefits counselors around how survivor benefit options are presented to widows and widowers at the point of initial claim. Previously, the guidance was loose enough that many counselors presented only the most straightforward option: collect the survivor benefit now, without walking claimants through the strategic alternatives that exist in the law. What SSA flipped is the requirement for counselors to actively present both options: collecting survivor benefits now versus collecting your own retirement benefit now and switching to the survivor benefit later, and to document that both were explained before the claimant made a decision. This does not help the people who already made that decision under the old guidance, but it creates an important opening for surviving spouses who are reconsidering a benefit election they made in the past. Here is why that matters. The survivor benefit for a widow or widower at full retirement age is up to 100% of what the deceased spouse was receiving, including any delayed retirement credits they accumulated. In many cases, that number is significantly higher than what the surviving spouse receives on their own retirement record, and in many other cases, the optimal strategy is to collect the survivor benefit first, while letting the surviving spouse's own retirement benefit grow to age 70 when it reaches its maximum. If you are a surviving spouse and your benefit election was made without a full explanation of both options, which under the old guidance was common, the updated SSA framework creates a basis for requesting a benefit review, and in some cases, a benefit switch that better serves your long-term financial situation. Call SSA at 1-800-772-1213 and ask specifically for a survivor benefit comparison review. Ask them to pull both your own retirement benefit estimate and your full survivor benefit amount and show them to you side by side. That call is free. The difference between the wrong benefit election and the right one can be several $100s per month, permanently, for the rest of your life. Here is what connects everything SSA flipped this week. Every single change
touches the same underlying problem. The system was not built to proactively explain itself to the people it serves. It was built to process what is in the system and apply the rules that exist. The rule changes that happen this week improve some mechanics, but they do not fix the fundamental communication gap that leaves retirees discovering important changes after the impact has already landed in their account. That gap is what SSA now exists to close. So here is what to do right now. Log in to ssa.gov and verify your earnings record for your most recent working years. If your Part B premium exceeds $185 and your 2024 income included a one-time elevated event, download and file SSA 44 today under the updated faster processing timeline. If you have received an overpayment notice, call SSA and ask specifically about the updated recovery rate framework and what modified arrangements are available to you. And if you are a surviving spouse who has never had both benefit options presented side by side, call SSA and request a survivor benefit comparison review under the updated counseling guidance. 4 actions. Any one of them could permanently change what lands in your account, starting with your very next deposit. SSA flipped the script this week. The question is whether you find out now and act on it, or find out later when the opportunity to act has already closed. If SSA now helped you understand what changed and what it means for your retirement income, subscribe to this channel and turn on the bell. Every time SSA moves the pieces on the board, I bring it here in plain English before the consequences land in your account. And share this video with someone you know on Social Security right now. What SSA flipped this week affects their check too. Whether they find out today or after the fact is a difference that matters.